I gotta change my name.
That's what I'm saying. So that's me.
Mm-hmm.
Hey, Donald, can you hear me?
Mine.
I can hear you. They have the wrong name here. I gotta change my name here.
So Ralph, on your
You hear me? I'm trying to admit. Okay, so
and
Torian's
say Alexa,
joining.
you want to edit profile. Oh no, hang on, I got it. I got it.
Okay.
I got it. No, I got it. I knew you could do it. I did.
Mm-hmm.
Uh,
So,
uh, mm. And I'm gonna say okay.
Okay. Okay, so everybody's on.
Ooh.
Okay.
right.
Right.
Okay. Thank you.
All
Mm-hmm.
right. So
Everybody's on, Mr. Baker.
all right. So everybody's on. So okay, we got let me make sure this is recording. Okay, so okay, so yeah, I'm Ralph Baker. I'm founder of Trump and the Global Economy, Trump and the GE for short. And it started out the quarterly speaker series where we bring professionals together, posters, politicians, economists, businessmen or business people, entrepreneurs to help parse through the president's policies and how they affect the economy and the community. It's been pretty well received. We're going to try to do it bi-weekly now to try to make it more current, to keep up with more of the current events. Over the past week and a half, GameStop and Wall Street bets have dominated the 24-hour news cycle. I think a lot of the populace don't really understand what's going on. So tonight we're going to unravel GameStop, the market, Wall Street bets, and what it means for the market and the economy. We're supposed to have Noah Neverson Sims, who actually the Louisville college student who trades on Robinhood. He couldn't make it tonight because he has a late class, but so we'll carry on. So this is Trump and the GE, also known as This That Heat. So we'll let we have Donal Davis, we have Torian Mitchell with us as well. So we'll let them introduce themselves and give a little bit about their background. We'll start with Torian.
Yes, I'm Donald J.
So really quick before I do that, Ralph, you may want to move your camera down slightly because we can only see. There you go. That's perfect right there.
Okay. All right.
There you go. We can see your full face now, brother.
Okay.
So yeah, just earlier, Torian Mitchell, my practice training wealth manager, and also COO of a edutech company that will be actually launching here by Q4 of 2021. Keep your fingers crossed. But yeah, that's just a little bit about me.
Can we hear from Mr. Davis? Give me a little more about your background.
Yes, I'm Donald Davis. I'm a mental health worker. I've been working with mental health for over 30 years. I'll be discussing probably how the society sees it, how is it affecting the society at the moment, what's going on with the trading.
Okay, so why don't you guys give a brief overview of your take on the economy, the current economy? Give us a couple minute overview of where you think the state of the economy is right now.
Sure. So I'll dive right in if Donald doesn't mind. Pretty much, we talk about this often, Ralph. So I feel like, I think if most folks really knew what the economy was actually doing, we really wouldn't be getting out of bed in the morning. That was pre-COVID. That was in my opinion, I think really a time that has surpassed the Great Depression. I don't really see that we've moved beyond that point very much. I think that what is new to people, where no longer the stock market is reflective of the economy as if it ever really was. But I think we've had this almost kind of warm blanket put over us, that we would feel that the stock market reflected the strength of the economy, and even the job market reflected the strength of the economy. And that illusion, I think, has largely been uncovered, and more folks are seeing the economy for what it is, how fragile it really is, how fragile our government really is, and really what matters in terms of where allocation is going. And as we've been seeing, the Fed has been pumping trillions of dollars into the economy, really for a decade, actually more than a decade at this point. So even the gains that we've been seeing in the stock market overall, even the gains that we've been seeing within the job market, have largely not been significant enough to change the 95% of folks' material conditions. So really, that's what we're, in my view, when we talk about the economy, that's what we're really talking about. What are the material conditions of the average person? So not just those at the higher end of the socioeconomic chart, and even not simply those on the bottom end or abject poverty, but the greater majority of the country, which is really somewhere just above the poverty line, federal poverty line, and then kind of touching that 100K a year mark for a family of four, largely for that largest chunk of the population. Obviously exceptions do exist. Some folks are seeing some successes throughout this year, throughout this pandemic. However, the largest part of the economy, the largest part of the population is still faltering. Folks are still fighting for $15 an hour, as if that's even a living wage. That even should be a goal. And I think that really speaks to where we are as a country. That a fight for 15 is still a conversation, is still a metric to hit, when $15 an hour still doesn't get you decent housing, still doesn't get you consistent enough paycheck to cover, food stores and gas in the vehicle on a consistent basis. It's still a struggle, in other words. So I think the economy is reflective of that the largest participants are still left out of the gains that we've been seeing. But there are some bright spots there throughout, but largely it's not a pretty picture at all.
So, Mr. Davis?
I believe right now the economy is a reflection of what we got going on with the politicians. It's uncertain for the average citizen. It's uncertain about what's going on. Now we have an increase in gas. The image that TV is giving the public doesn't match up what the day-to-day guy is going through. Yes, there's some programs that have been started, there's stimulus and stuff, but after the money run out, then what is the public to do? Because that money is only going to be temporary, and the people realize it's going to be temporary. We're gone in a downward spiral. People can feel it, but they're not certain on what to do. And the uncertainty is causing a lot of rest. You're having these protests. People are unrest, but not really feeling, we can't put our finger on why, but people know something is not right. And they're willing to follow people. They're unhappy because of the economy. They begin to put Band-Aids on it, but the people really can just not satisfied. They can feel it. They can't pay their rent. They can't pay their electric. And I don't know how long is the electric company and the housing going to let the people not pay. But this is a capitalist society. It's all based on making money and doing what you're supposed to do. So it's reflecting that people are unhappy, unsure, and that's not a good thing.
Okay. From my perspective, it's pretty hard to really talk about the economy's vital signs, which we usually do. We usually start with that, the economy's vital signs. Remember, we talk about this event, but because of the pandemic, and politicians will make you think that the economy is bad because of the pandemic. In my opinion, the economy was always a bubble looking for a pin, and the pandemic provided that pin. And so I guess we get a reset as far as looking at the vital signs of the economy. But I think Mr. Davis pointed out a couple of things I think it began with the Obama administration. President Obama and Ben Bernanke talked about spiking asset prices. So you have a recession and you have prices rising during a recession, which is not a good thing. I don't know who thought that was a good idea, but you basically pretty much create stagflation when you have rising costs amid a recession. So you have prices for gasoline rising, prices for healthcare, prices for cost for college, prices for real estate. And the economists call these things inelastic goods, which means that demand doesn't fall when price rises. So usually in a healthy market, if it's a market price and demand is at equilibrium, if you change one of those things, for instance, you raise the price, demand would drop. But for inelastic goods, the demand doesn't drop because you have to be able to heat your home, you have to be able to drive to work, those type of things. And you can't afford not to go to college. You may not be able to afford it, but you can't afford not to in a lot of ways. The other thing is that I think one thing would be interesting is that you see a lot of people leaving cities because the cost of living in a lot of urban areas, California, New York, is getting out of control. And costs don't fall. Nobody can really understand why costs don't fall, why prices don't fall during a recession. They're supposed to fall. But the government, and it began with the Obama administration and Ben Bernanke, wanted to spike asset prices because they were afraid of deflation. What they really did was help the people who own the assets, which happened to be President Obama's donors, somebody he wanted to work for, he left office, or somebody he wanted to sleep with. One of those three, in my opinion. But so I think one thing would be very interesting would be when this pandemic is over, you'll see a flight from a lot of urban areas to have infrastructure built up to support millions of people. So, for instance, nobody's taking the subway in New York now, and I think the subway is going to have a bailout subway system. A couple $100 billion. You have nobody taking this, using mass transit in Los Angeles or San Francisco. I think it's going to be similar even when the pandemic is over. So I think that's going to be something to watch. These cities struggling with infrastructure built up to support, millions of people who aren't going to be there. I mean, what's California going to do when you have all these venture capitals making money in San Francisco, but now everybody's leaving San Francisco because they can't afford to live there? That's what happens when you have I guess they call it top-down economy, where you basically created a system where the people benefiting most of the people who own the assets, real estate, stocks, those type of things would happen to be venture capital firms, private equity funds, and hedge fund managers, which we'll get to later. So that's my sort of 20,000-foot take on the economy. So I think it'll be very interesting to see what happens when the pandemic is over and you'll see people leaving these urban areas, and what happens to the infrastructure when you have, that's designed to support millions of people who won't be there. So I guess the venture capitalists and private equity firms and hedge fund managers have to all take the subway to support the infrastructure. So we'll get into, I think that does a good segue into GameStop. So there's been a lot of publicity about GameStop. I first saw there was sort of a short squeeze about a week ago. I didn't really pay much attention to it. I know this also, you saw rising prices for BlackBerry. But BlackBerry had just settled a patent litigation situation with Facebook, so that would make sense. They would get a lot of capital from the patent litigation. Also saw Bed Bath & Beyond, which I was always down on because they were trying to transition to online. They were taking a long time to do it. Stocks rising. So we'll start with Mr. Mitchell. I'm going to give us, I guess, a high level viewpoint of GameStop. We take a swing at high level viewpoint. Then we'll drill down on the specifics. But just tell us from a 20,000 foot level what your take on it was.
Sure. It was, it really, the movement. I think I missed probably the first half of GameStop's movement, which was later revealed to be, really on the, I guess on the vision, we can say, of one particular gentleman who will be going before Congress to talk about this entire situation, I believe next week. So we'll be hearing from him shortly. But GameStop came on my radar really a few weeks ago, though. So it was before its kind of meteoric rise from, I want to say it was right around $60 when I first saw it, and it went from 60 and shot just over $500 a share, which was, I guess, still bananas to even think about it in such a short time. But my original take changed, honestly. So I think my original take was that maybe there was some value here. Maybe something was going on with the company. I wasn't quite in the loop with the Wall Street bets cohort there. So, I think I did the same thing that most, analysts or anyone that follows stock, even, in a very rudimentary way, would, start looking at the company's fundamentals and saying like, okay, what's going on here about besides the technical analysis that would support this type of rise in such a short period of time. Obviously, we knew the new CEO came from Chewy. Chewy is already sitting over $100 a share, so he was able to bring some value in. But from my perspective, it still wasn't enough that was driving the cost of it where it would warrant. So, just kind of did a little bit more digging, and I, kind of tripped and fell over the lead on social media of all things. I heard of Wall Street bets before, never really looked at them, and that was my first time and really kind of opening Pandora's box to really understand, okay, this is what this is really what's going on and really what's driving it. So it's ironically to me, I think GameStop is the epitome of the example of what's been happening in the market overall. One of the things that you and I have chatted about offline is the IPO market. And when we look at the IPOs on a comparative basis, just over the last 2 months, there have been a few hot IPOs, so to speak. But when you look at the numbers of the companies, I won't say any names, but I would just say that there are 2 IPOs that shouldn't even be companies, frankly. All I would say is that if we're penalizing WeWork, and the word Ponzi scheme came up a couple of times with WeWork, and I would say that WeWork had better fundamentals than some of the hottest IPOs that have come out in the last 90 days. However, when we look at where the stocks went, which is my point, it was pure momentum because it was driven by name recognition alone. It's not driven from a technical analysis, certainly not a fundamental analysis. And when we saw those, stocks driving up, 200+%, company doesn't even have any intellectual property. Meanwhile, we're valuing it at $110 billion. How you extract that $110 billion even 10 years in the future is beyond me. So looking at GameStop, just to bring it, back down to earth, is that it was all momentum. It was just all momentum driven. There's nothing about GameStop that will warrant, certainly $100, let alone a $300, $400, $500 a share valuation. But it's all momentum. It just so happens to be the perfect storm where you have now institutional capital versus retail traders, and the retail traders got the best of the smartest guys on Wall Street. They got the best of the hedge funds. They got the best of the behind the scenes deals and the closed door conversations that often happens that most of the public doesn't get privy to. But a bunch of guys and gals collectively crowdsourced their information, shared it openly, and figured this thing out that, hey, something's afoot here. And I think we have an opportunity to simply take advantage. And I think the hilarious part about it is that while some of the media has been demonizing them, the only thing that they did, the only thing that they could do as any retail investor is simply buy and hold. That was it. They didn't use any fancy tools. They simply bought shares and held those shares. And now, if we let the mainstream media tell it, prior to this most recent congressional hearing and Janet Yellen stepping in, you would have thought they were Billy the Kid and they were sticking up the bankers. So the only thing they did was what they could do, just simply buy and hold. And that alone outgained some of the smart, the quote unquote smart money on the street. But yeah, that's really the 20,000 view of it is a bunch of folks. And prior to the most recent spike in their numbers, before the spike, I believe their subscribership was lingering right around 2 million. So even if, let's say half of that, 1 million folks, simply bought 5 shares apiece, they figured out that it would be enough to put pressure and get a short squeeze by simply buying and refusing to sell. So yeah, we're just looking at a situation at the power of people. That's it. That's really what the story is the power of people, and what can change when the power of people connect with a singular mission and idea. It just so happened to be their mission was to get rich. That's it. They wanted to take advantage and get rich.
Mr. Davis, what do you think?
I agree with the power of the people was very important. GameStop gave us a good lesson. We laughed about the movie Trading Places, but it's not so funny now when actually you see it in motion. When Eddie Murphy was doing it in the movie, everybody was laughing. Not so funny now. Now we kind of look at this thing, wow, the average guy didn't realize that was going on. Now you tell me I can't trade, I can't do this and that. And that goes against the grain of the American, what we believe that you can do. If you're just smarter than me, you just outdid me. That's it. Cut, dry, nothing special. You lost some money, you lost some money. I lose some money, I lose some money. But GameStop gave us a good lesson. It opened the public eye. People that had not been studying the stocks had no interest in it. But it did show how the government, how somebody lost some money, asked the government, hey, put a halt to that. Ask somebody, say, hey, I'm one of the big boys, and I don't supposed to lose by these guys. But that's not how the game is played. It has gave us an eye opener for the average guy. And the sad thing about it,
So sad.
Can't kill the American. I said, very sad, very sad. We can't kill the American dream. That's the whole thing about America. That I can go get a good education. Doesn't make no difference where I graduated from or what's my background, but I can invest and I can make some money. And it doesn't make a difference what group I'm with. And now that it happened, it makes the American people say, hey, you know what? That's not right. That's not right what they did. They can't make it right. And the average Joe now, you begin to make us look a little bit more. Wow, they've been doing this all the time. So it hurts. It hurts our image as Americans. It hurts our trust. We have to be able to trust when we invest something. If I do better, that's capitalism. I have to trust you. Now the door's been opened. Can I really trust what I see? I think they're going to have to step back a little bit and rethink what they've done. Because it's going to be some more other times that it's going to happen. It's not a one time only. It'll happen again. That's how people are. If something happened once, it'll happen again. So where do we want to go with this? But GameStop has gave us a lesson for us average Joe. That's my take on it. And we have to look. The government have to really be careful. The image. Do we really want this image? I want to be the image that somebody out thought me, and I want to have the big boys to cry to me and to bail them out. Is that always going to be the case? Or was that always the case? The public didn't really think that. And I think we got to be careful with that. GameStop has opened our eyes on that.
So I discovered GameStop. I wouldn't say I discovered it, but it's one of the companies that the kids, when I was working with the kids in summertime in New York Stock Exchange, we would teach them how to pick stocks. It's one of the companies that they liked a lot. This is back in around 2006, 2007, because they had the employees were very well educated on the games. They could go in there and trade games. You could trade used games, and it was real popular with the kids. But now with the online gaming, GameStop has to make the transition because you don't necessarily have to go to a physical location to play video games. You don't have to buy video games from a physical location. We can play video games right now between the three of us if we knew how to play. But so that's not only they've been struggling with that business model, but I saw when the stock spiked to $60. I bought it with some call options when it was in the 40s or something. It went up. I said, I'm not gonna hold this over the weekend. It's gonna crash. It went to over $100 that day, I think on Friday. Then it doubled again. I'm like, holy cow, what's going on here? And so they kept, online, they kept talking about something called Wall Street Bets and Reddit. I started looking into it. And there's some guy talking about, just hold it. And what they did is what I've tried to do. I write for Seeking Alpha, and a lot of times I find stocks that are heavily shorted. And sometimes I'll try to buy and see if I can make the stock go up. But just one individual is not going to work. Sometimes you can get people to go in on it with you and believe you. But if it goes up a little bit, they tend to sell it and take a quick profit. What these guys did, they had billions of people with maybe accounts of $3,000 and $4,000 a piece, which is like a sizable hedge fund, really. You got a couple million people with $4,000 an account. That's a lot of money collectively. What this guy got somebody to do with millions of people to go in on it and to stay on code. When it doubled, they didn't sell. They held on. And it doubles again. Who does that? You know what I mean? They weren't acting like traders. They were acting like long-term investors. And they knew that they knew once it started going up that these guys had to cover. So I've seen short squeezes in the past, but never quite like this. They knew the guys had to cover. Then when it started becoming a phenomenon, then you saw Elon Musk tweet about it. He tweeted about it that sent GameStop another leg up. You saw this guy, I guess the guy from Barstool Sports and other celebrities started talking about GameStop. In this short squeeze, it wasn't just driven by individuals. Once it started taking hold, you saw institutions were getting involved. But you had the media talking about the individuals. And so what the media would do is try to run interference for a lot of these big hedge fund managers. Steve Leisman from CNBC went to a Fed meeting, a Federal Reserve meeting, I think it was last week. He actually asked Jerome Powell. I didn't see the meeting. I think someone asked Jerome Powell about GameStop. I think it wasn't really, the question wasn't answered properly, or something wasn't answered to the extent that people wanted. Then Steve Leisman asked again about GameStop at a Fed meeting. What are you going to do about GameStop? As if something was going wrong. These people took public information, saw highly shorted stocks, and said, let's go buy these stocks because they're highly shorted. GameStop, I've never seen a stock that's been shorted over 100% of the float. I've never seen that before. Crazy thing you ever seen. They used public available information, did some legwork, did a lot of research. This is the game plan, and people have done that in the past and lost money. We don't know how many people have done that in the past and tried to buy heavily shorted stocks and it didn't work. They lost money. We don't hear about this because it made money. And you have this guy from CNBC is making it seem like there's something wrong with GameStop. What's going on with GameStop? What are you going to do about GameStop? As if somebody manipulated the market. Nobody manipulated anything. A lot of people bought stocks. They took a risk. There was a chance it would not have worked out. They took a risk. They bought in hell and made those guys cover. And when they covered, and the guys weren't selling, people weren't selling, you had to continue to keep buying the stock, which kept bidding up the shares. You back, Tori? So they kept as they kept had to bid the stock up to buy more shares to convince people to sell. It was the craziest thing I was seeing, and I knew somebody was losing a lot of money. And so when Steve Leisman went on as the Fed, I had an impression that somebody, there was going to be like a Lehman moment or Bear Stearns moment, because somebody had been losing a lot of money. And I saw the numbers. Melvin Capital, I think was Torian, like $7 billion, something like that.
Yep. In a day.
I was like, what in the world? When a hedge fund loses $7 billion, they have to, it could be a margin call or something. They have to get capital from someplace. And we know with these, they call like, in insurance, they call it like a retrocession, where like an insurance company loses money and the loss is so big that the reinsurer loses too. The reinsurer has a reinsurer, they lose too. So it's kind of like a domino effect. So you have these hedge fund managers who bet capital that they bought. A lot of times they bought money. If they can't pay, they can't pay their counterparty. Their counterparty can't pay their counterparties, and so it reverberates to the system, and it ends up at the Federal Reserve. The last stop is to get a bailout. That's what the Federal Reserve is there for, to help stop bank runs. So Steve Leisman is running interference for these big hedge fund managers and making it seem like these individuals are doing something illegal. They're manipulating the market. Nobody's manipulating any market. You see a bunch of zombie companies like that don't have any capital. They're practically insolvent. They trade for years until they actually go under. That's a manipulated market because the Federal Reserve is investing in the market and keeping the market afloat. Then we have a Dow at 30,000, 31,000. There's no reason for the Dow Jones to be at 31,000. And there's several companies I've looked at in the past, like Molycorp. I've written about Molycorp, Weatherford International. They actually eventually went under, but they kept raising capital. The stock's going up and up and up, even though the company's insolvent, which may have more liabilities than they do assets. And the stocks don't trade based on reality. So I don't know why anybody thought the stock would be manipulated. It's all running interference for the big hedge fund managers. It's ridiculous. Doing PR for Wall Street. So I was actually excited about Wall Street Bets and these Reddit guys that, almost like I was excited about Ferguson. We see people in Ferguson stand up a couple of years ago after the Michael Brown incident. Make other people feel strong enough to stand up too. It makes Wall Street, when you see Wall Street Bets take on the big guys, it makes you want to stand up too. And that's why people were buying in on it. There were also some big institutions probably didn't like some of the hedge fund managers, so we're going to amplify this thing. So now, then you had Elizabeth Warren said SEC needs to look into this. Joe Biden, we're investigating. So it's to me, as soon as people try to make you think you're cynical, but as soon as one of Obama's donors loses money or Biden's donors loses money, here comes the White House to get involved to come stop it. I've never quite seen anything like this where they say you can't trade. I've never quite seen anything like that. But the kids were like, the economy's, the stock market's rigged. It's set up to help the 1%. And it's something we've been saying for years, but now you have young people saying it. And the beauty of all this is that over the past 4 years, everybody's been trying to resist Trump. That's what the last election was about, resisting Trump, and Donald Trump is nowhere involved. These young guys, these young kids made a boatload of money. They were about to go. I don't know how much money they lost, but not letting GameStop go from 500 to 1,000. I don't know how much money they lost, but Joe Biden said we need to investigate this. He ran on a ticket of a theme that we're going to bring the country back together again. And with his first 100, he hadn't been offered 100 days yet. He's already dividing the country by trying to help hedge fund managers, cover losses at the expense of retail investors. And so it shows you that maybe this thing about resisting Trump was just like a rallying cry, but you see the Democrats kind of, the things that people will accuse Donald Trump of, you see the Democrats already doing it, helping the big guys, the expense of the little guys. And that was my complaint about the Obama administration, that rising tides lift all boats. We're going to print $30 trillion and give it to his donors, somebody he wants to work for when he leaves office, or somebody he wants to sleep with, and call it economics. There's no economist will tell you to do that. So you have the Dow spike to 30,000, and it's helping that created an environment for Wall Street, for a GameStop short squeeze of this magnitude, where you have all this Fed stimulus, all this liquidity into the market, that stocks just don't go down, and now you have people jumping onto this short squeeze, which amplified it. So I think a lot of the Fed policy probably created an environment for Wall Street bets, and he had a lot of smart guys. I don't know how Wall Street bets did this to get millions of people on board and stay on code to buy and hold. That's phenomenal. That was what made this short squeeze different from other attempts, because you can get people who buy heavily shorted stocks, but can you get this many people with this amount of capital, marshal this amount of resources to take on the big guys and get these guys to stay on code? So to me, that's from a 20,000 foot level. That was phenomenal. The other thing is that these individuals have done no more than what hedge fund managers are doing. Hedge fund managers they go into these crowded trades where they put capital into the same stocks like Facebook, Apple, Amazon, Microsoft, so on and so forth. They also have idea dinners where they meet and talk about, there's nothing illegal about it, but when you have this much capital going to a certain, very few stocks, it's going to cause those stocks to rise. So to me, I think what the kids did was phenomenal. It's anti-capitalist to not let these kids trade, and then when they didn't let them trade, you saw the stock, prices for GameStop and Nokia, AMC theaters, naked brands fall, and also the other things that they actually helped naked brands and actually helped AMC actually raise capital to help these people survive. So that's my 20,000 foot take on it. I think it was phenomenal. The other thing is that probably other stocks that heavily shorted too. I think we're going to see more short squeezes in the future. So give us a more granular take on this, Torian. I know you've done a lot of research as far as the details.
Yeah.
I may have to think. Give me a chance to get my thesaurus before you start.
Well, one thing that I'll say is, let me make the distinction very clear. After now, in full disclosure, I joined the group as of a few weeks ago to really understand, just kind of the inner workings. The psychology behind it a bit, and then also, is it more than simply momentum that's really driving this thing? And one of the things that it seems that the original subscribers, so kind of the OGs of Wall Street bets, were very apolitical. They were not doing this to make a stand. It was not a us versus them. It was not Democrats versus Republicans. It was simply, here's an opportunity to make some money, and we're going to exploit this thing and keep our fingers crossed. But it was using some some of the best research, frankly, some of the best research that I've come across. Because when you have, easily 500,000 folks and we're not talking about just simply novice traders here. You're talking about some folks that I'm quite sure have spent at least 15, 20 years within the industry. When I'm seeing Bloomberg terminal printouts for the technical analysis, that's letting you know that you're not dealing with just a bunch of novice guys who decided, hey, we got a couple bucks to spare.
Right.
Let's go in our money and see where it goes.
But not to cut you off, but the funny part is CNBC kept calling them amateur traders. That's the part.
Right.
He purposely kept calling them amateurs.
Right. That's the point that
These guys are not amateurs.
Not at all. Not at all. It was largely driven by actual professionals.
So would you call that fake news?
Oh, 100%.
That sleight of hand, the amateur traders?
Yeah. I mean, even the fact that if you take a look really so from the point that Melvin Capital first started announcing that they were getting rid of their short position, the news cycle quickly followed up and echoed that sentiment. And one of the things that stood out to me, and very much so to the group, is that there were no numbers. Where were the numbers to the reports? How many shares did Melvin Capital just get rid of? It was just a general sentiment. Oh, Melvin Capital is now fully out of the position. In 24 hours, how did they get rid of 50 million shares in 24 hours? It just wasn't making any sense. And it was so much misinformation that was pushed by the media, which certainly gave the impression that it was a controlled media source. And it was everyone from Squawk to CNBC to CNN to Bloomberg. It didn't matter. There were very few publications that sought to get the story right on this one, and was simply demonizing Wall Street bets, because frankly, they were, from I think the media's perspective, a gaggle of faceless accounts that really had no name. They really weren't. There really wasn't a way to point a finger and say this guy or that woman. But Melvin Capital had a face. Melvin Capital has the capital. They obviously have.
They had the capital.
Connection, 100%. They have the connections. So we could easily surmise that the media was taking the side of Melvin Capital on this, and pretty much any institution that looked at Wall Street bets as some type of threat to the market, some type of threat to the undermining. And I even heard that they were undermining undermining the economy. Like they just bought some stocks. Like, how do you undermine the economy by buying into a company that you largely believe in? It was just wild watching this whole thing unfurl. But one of the things that really stood out to me was that even outside, because I do believe that before Robinhood, Robinhood definitely started the domino effect. So Robinhood's, Tenev has been on a couple of interviews, in my opinion, saving face. I think rightfully so, as any CEO of a company. Obviously he's one of the founders of the company, so he's going to defend it, to the grave. And from a CEO perspective, I can't blame him for doing so, but I can critique the information. And he was pushing this idea that it was not a liquidity issue that they were facing, which is why they stopped the trades. But something that was happening was assignment. So that's one of the stories that has not really garnered a lot of attention, is that they were selling shares from Robinhood holders' accounts. So the majority of the Wall Street bets cohort, as well as those that were watching, even today, even after all of this debacle, they have over 600,000 new accounts, Robinhood, almost on a daily basis. Understand the magnitude of that. That's more new accounts than Fidelity, than BlackRock, than any other online broker combined. So when we talk about being at the center of the spigot, they were the spigot. That's important to understand, because when they turned off that spigot, you took 95% of the market right out of the game completely. But not only did they take them out of the game, the lesser story was that they were also assigning shares. They were forced selling shares from Robinhood account holders, and simply, sending them a notification, although that particular Robinhood account holder did not actively sell shares. We're going to see a ton of these come out. There's over 35 class action lawsuits against Robinhood, TD Ameritrade, and others as we speak. I think those numbers only grow. But we're going to see this particular part of the story come out more and more, is that they were assigning their shares, and typically assignment, if shareholder, someone is shorting a stock, or even has an option, for example. So if I purchase an option and I want to exercise that option, meaning I want to move from the contract over and buy the actual stock, then I am going to be assigned those shares. So if the firm, so if I have a TD Ameritrade account, for example, and if TD Ameritrade does not have the shares on hand, although I am exercising my right with this option contract to pay for these shares and get these shares in exchange for my cash, the firm has a contractual obligation to provide me with those shares. Now, what I believe was happening on the other end of that, because the shares were, one, it could be a combination of the volume of trades that was happening, but also the volume of shorts that was happening. This is where we get this question of, how the hell do you short a stock 120%? How do you go beyond 100% of anything in life? So, I believe that they were taking them from their account, from the existing account holders, in order to fulfill the other end of those contractual obligations. That's my 2 cents on it, but I think we're going to see that particular story of it, part of it, develop. The other part that I think we've now seen is that since they have, stopped the flow of free-flowing buying and selling within not just GameStop, but pretty much AMC, Nokia, all of what's been qualified as meme stocks. Any stock that's been pushed by Wall Street bets has been pretty much turned off or limited. Even after they opened up the buying to the retail traders, this was a particular point that stood out to me, which, again, I think we're going to see unfold through the congressional hearings, is that when you look at the SEC data, so the SEC puts out short data, and it's publicly available. It's just it's a lot of work going through all of that information. You can download it, comes in a XLS file. However, one of the things that stood out just a few days ago was that the most recent tracking from the SEC was that of the total, so they look at the total amount of shares traded, over 26 million shares had traded that particular day. Of the 26 million, the short interest, which means how many shares are being shorted, within that particular stock was over half, over 16 million shares were being shorted. And then the real story, which is where I think we see what's kind of known as, or what's going to come off as manipulation, is the uptick rule. So the uptick rule says that you can't dogpile. SEC put a regulation SHO. You cannot dogpile on a company if that company's stock is going down. So just like we saw today, literally GameStop dropped 40 points today. Opened up, I think, at 92, 93, dropped all the way down to 54. So SEC put in a rule that says while that stock is continuing to go down, you cannot short that stock. You have to wait for an uptick. You have to wait for a bounce, and then you can short the stock. The reason for this uptick rule was to prevent a company from, going, from one, value to no value in less than a day. Other metrics are in place throughout the exchanges. Like if a stock just drops 10%, they can halt things of that nature. However, but the point is that these are measures that are to protect companies from being predatorily jumped on by over anxious institutional capital, from completely bankrupting that company. However, there's an exemption, and the SEC tracks that exemption. And this is where it gets interesting, is that of the 16 million shares, which was already over half of the total volume of shares that traded that particular day, over 10 million shares of the 16 million were exempt, which means that this is institutional capital 100%. Retail investors don't know enough, at least not the majority of retail investors. In fact, I have yet to even hear this or see this particular conversation come across on Reddit, but I think that is where the existence of the hedge funds, existence of the institutional capital that has jumped on board, and where it is going to be kind of deemed as market manipulation, simply because if you have a rule and you have a regulation in place, but if institutions can simply get a waiver to circumvent that rule, and that waiver is not available to every investor, irrespective of the size of their account, well, now we have a situation that is going to garner some heads turning and some eyes opening, because that is, in my opinion, an unequal system, and that is manipulation of that system. And I think that's what's really driven the stock down, on top of Robinhood closing off the spigot.
Okay. Thank you for that. Mr. Davis?
Well, I think right now, I agree with the gentleman. I think right now, what we have to look at for the public, we have so many fires now. And I said fires, we got the GameStop thing. We got the Congress and the senators fighting among themselves. We got the doubt about the election. We got the gas going up. The public itself, it's just some of the fires they're fighting right now. We got the COVID. So for the average guy, he's just trying to make it through right now. Will he keep up with what's going on in the stock market? Will he be able to keep up with it? He's just trying to live. And so many fires is, by the time he focuses on one thing, something else And we do know the media has some bias. And is he getting the straight information? That's the problem. Can you trust the media to give him the information that he needs to make a sound decision? If I was trying to invest, it would be hard. And I'm glad the gentleman brought out, these were not amateurs. They weren't newcomers. They're investing in this stock. These were professionals. These gentlemen have been into the game a while. The media made us think. See, it was a bunch of guys that, got together and the way they made it sound like, but hit by luck. And it wasn't by luck. They did some research. They did some hard work. You got too many fires right there for the average person to put out, to understand. But what we're gonna have, if we don't be careful, we have to remind ourselves of the 70s when things started going bad in the recession. Our inner cities started deteriorating to the degree that we already begin to see people moving out. Safe, they can afford it. I feel safe. How many times can a city actually be bailed out? We don't know. But we do know the media, the way they're putting the spin on things. You can't have a good guy, bad guy situation. When we're trying to get things stable, when we're trying to get the economy stable, we're trying to get people to have confidence in the United States. Our confidence has been shaken pretty bad. I think the ones at the top, they do have a responsibility. Now, they don't have to play fair, but they should play fair. They have a responsibility because the government has bailed out quite a few of them, helped out, made some rules, make some, as you said, some waivers, and yes, they can have the skill to use the waiver. Have to be careful. We really, truly have to be careful. The social unrest has not stopped. And by constantly reminding the public that we can't trust the system that we thought we could trust, we're going down a bad road. Well, we're already down the road. I don't know where we're going to turn it. I'm hoping that our president, Congress, and senators will realize they have to pull together right now. You can't play favoritism, which that's normally, but you have to think of the whole for the American people. And right now, the American people have too many fires to put out. It's just too much to notice. And we're not able to, we can't walk blind in that. Everything is too easy to get access to. If I want to find out something going on, it might take a little work. I might not understand all of it, but you have to make it simple. Keep the game simple for people. We're not doing that now. We're just not being fair to the American people. And the politicians have to realize that you can't win with that. You never have won with that. You're always going to cause social unrest. And we just begin, we thought it happened over in Europe a couple of years ago, and we didn't think it was coming here. Well, a lot of times when something overseas happens, sooner or later it'll come here. Because it's a mirror. You're looking at yourself. That's all you're doing, looking at yourself. If you see them manipulating things over there and it's not working over there, buddy, it's gonna happen here. It's gonna come. One of the great things about America, we supposedly learn from somebody else's mistake. Don't repeat it. Look like we're beginning to repeat it now. So the economy, the trading stuff, we're gonna have to clean house, or maybe that's gonna come in a world of chaos, organized chaos. That's where we're at now. We're just an organized chaos, and the American people deserve more. Okay.
I think that's one thing that's interesting is that what Professor Adolph Reed, University of Pennsylvania, what he called the Negro Whisperers. A lot of the black people in the media have not said one word about this. Nothing. When Donald Trump was in office, they were chirping every day about something. Nobody said one word about this. With Joe Biden talking about we're going to investigate what's going on with GameStop. We're investigating. You have Elizabeth Warren concerned about what she's saying that this is not helping the employees of GameStop. The stock going to $400 to $500, not helping the employees of GameStop one bit. It is helping the employees. They could have potentially raised capital and increase liquidity, paired debt, raise money for working capital to keep the business going until they can make a transition to online gaming. My nephew, who was supposed to be on the call, he said that they just after the market is rigged. He thought he was telling me something new, but he said the market is rigged. Just helping the 1%. So I'm curious, Mr. Davis. A couple of testimonials from Wall Street Bets. One kid said he made $33,000. Another kid said he made $50,000. He can buy a home. One kid said he made $33,000. He can help his mom out. Who knows how much money these kids lost by not letting GameStop go to 1,000 or 1,500. So what do you?
Right.
I'm in my early mid-20s, and I invested in GameStop. I did the research alongside Wall Street Bets, along with that and other stocks too. Invested the money. Saw dumb money. What we call it when I was working G Capital, we call it mullet money. It's dumb money. A mullet is a dumb fish that sits at the bottom of the ocean with his mouth open. If fish swim into his mouth, he eats. If the fish don't swim into his mouth, he starves. Too dumb to go looking for food. So we call it mullet money. So Melvin Capital, I guess Steve Cohen, his hedge fund, and several other hedge funds. It's dumb money to invest to short over 100% of a stock, over 100% of the float in a market where the Federal Reserve is constantly pumping liquidity to the stock market. That's dumb money. They got exposed. So these guys are smarted. These guys found dumb money who wanted to give their money away and made it work. And they've been missed out on untold amount of, who knows, that 33,000 could have been, $200,000. What do you tell us? He comes to you and says, what do you tell someone like that? Not after, but before he goes out in the street and does something crazy. Before he's down at the Capitol building in DC doing something crazy. Not after, but before. We know it's going to happen. What do you tell someone like that? I'm curious. I'm asking for a friend, by the way.
Well,
it's not for me. It's for somebody else.
Right. Right. Well, one of the biggest things I wanted them to believe that this is what we're based on. Now that we will want him to believe that this is an isolated situation. It was mishandled. The media mishandled it. Should have praised those guys. Say, hey, you know what? That was some good thinking these guys did. Not turned it around and made it something else. You want the young person to understand that is what America is all about. And you have a chance. You have a chance, and that's what you got a whole trail of people trying to come to you and say, believing that that's what the American dream is, that I could take something for nothing and make it. But we also have to practice it. We have to show this young person, hey, yes, you can do this in America. And this might have been an isolated situation, but we still have to encourage. We still have to make this dream of America that a person can make it and invest and make some money, and that it wouldn't be manipulated always like that. We have to stay clear of that. That's what makes people want to come here. They really believe that America, you could do that. You got you got people coming from South America, a great big train of people trying to come here. They ain't coming here just because we give good food. They come here for the American dream. And you tarnish it when you don't do what you're supposed to. And you don't want to tarnish that. That will make us different. That will make America great. Not because you got a super education, not because you got all these, you take a whole piece of a puzzle to make you great. And now we're tarnishing it. So for the young person, we have to still have faith. I would tell them, don't give up faith. Don't give up hope. Because that one thing about Americans, we're going to bounce back. What has happened has happened. But the public has the most power. Don't underestimate the people. Because when you start underestimating the people, you give in to the people of power. You can't give in to them. You can't say, okay, that's the way you're going to work that's the way you're going to operate. No, we can't do that. We have to call them out. If it's wrong, it's wrong. And we have to call out the government for supporting it. Can't do it. And that's the only thing I can tell a young person there. Have a faith, because this is not going to last forever. They're going to be called out. The public is going to do something. Just wait. Now, I'm not saying go to sleep and don't do nothing about it, but you have to be a participant. And I'm not saying go and tell nothing, no. That's frustration. That those people was frustrated. When you see frustration, when people, when they don't have no voice, they'll tear up. They go. There's nothing else left. So I tell the young person to have faith and keep doing what you're doing. Keep focusing. This path right here can't continue.
Okay.
That's it, Mr. Baker.
Okay. So from my perspective, and I know a couple of the CEOs from the broker dealers, went on corporate media and said that they would stop shutting down some of the trades for eliminating some of the trades in these meme stocks because they were getting too speculative. I never heard anything like that before in my life. I know the CEO of Robinhood said that he started explaining that people just don't know what it takes to clear trades. Like, what's it got to do with anything? You raise a straw man argument as if it's having trouble clearing trades. I know he'd go out and raise a couple $1 billion. Didn't explain clearly why he needed the capital, but that was the Federal Reserve was set up for, to stop bank runs. The Federal Reserve was not set up to pump the stock market. It was set up to stop bank runs. And in my book, I describe how back before the Federal Reserve, there people would go to John Pierpont Morgan, other bankers, ad hoc. Say if I'm a banker and I'm about to go under, that means I can't pay my counterparties and they can't pay their counterparties. So it would behoove John Pierpont Morgan to who was the key banker at the time to bail me out to keep the whole system from failing. But obviously he'd take a princely sum. So people like Carter Glass, who from Lynchburg, Virginia, where Mr. Davis and I grew up. We grew up nearby Farmville, Virginia. He helped sketch out this framework for the Federal Reserve. But the Federal Reserve was set up to stop bank runs. They could have easily gone to it should have been able to go to the Federal Reserve to make sure those trades were cleared, to raise capital, make sure those trades were cleared, to maintain the integrity of the stock market, of financial market, which the Federal Reserve constantly talks about. I don't know why they didn't do that. He never explained why they didn't do that. But if now Janet Yellen wants to get involved after the fact, it makes no sense. They also could have raised equity maybe at a discount rate if they needed quick equity to clear those trades. This should have been a scenario that Robinhood should have thought of. They never really clearly explained why about these capital calls. Understand why hedge fund managers needed capital calls, because they were bleeding capital. The other thing is that a lot of times, a lot of the unwinds of hedge funds, we've witnessed like long-term capital management. The hedge funds owned by Bear Stearns, also the banks, Bear Stearns, the investment bank and Lehman Investment Bank, because asset prices were falling. We never seen when asset prices fall, how much you can lose. You only lose 100%. So a short squeeze like this, the potential loss is unlimited. As stocks can go up and up and up. You invest $100, you only lose $100. If you're short $100, you can lose multiples of that. Mm-hmm. That's probably a difference to this. And I think the government not really clear that there probably was a risk to the system that they shut this down, but they did it at the expense of all these individuals. Couple of things. One example is with the long-term capital management is when it went under years ago. They went to some investment banks to help get bailouts because and long-term capital management goes down. It puts Goldman at risk, Lehman, Salomon Brothers, so on and so forth. So they all got together. So what we're going to do about long-term capital management? Goldman Sachs took a download of their assets. Took a download of the assets that long-term capital management had. Went back to their office. They think they were short those stocks anyway. Started selling those stocks. We drove the price down. The Goldman long-term capital management needs capital. They have access to X. Assets worth X. Goldman fell assets they own, sold them, drove the asset prices down, and then tried to sell it back to them at a discount, which basically turned predatory and made the situation worse. But you're gonna say these kids are doing something wrong. Like, that's supposed to be the smart money. Goldman did that to long-term capital management, which made the bailout even worse. They're selling assets that long-term capital management has, driving them down on purpose. No, they have the list of all the assets, all the securities, and then so we'll sell it back to you at a discount, with worse than the problem. A couple examples. I actually shorted on Teva. I say shorted, bought puts on Teva a couple years ago. Teva had it's a pharmaceutical company. It had just a couple years earlier had bought a generic business from Allergan at height of the market. Shortly after they bought it, generic prices started coming down, but the debt didn't come down at the same rate. So it made it hard for them to pay their debt. Then they had generic competition from Mylan for its key drug, Copaxone, the largest revenue producer at Teva, the biggest margins. So I knew they were going to get downgraded by the rating agencies, and I started writing about it. Started writing before the downgrade that Teva was a sell. After the generic competition for Copaxone, I shorted it. Was loud about it. And I write for the Stock Exchange on Seeking Alpha. So you got this random person nobody knows calls himself the Stock Exchange. They probably know I'm African American by the way some of the stuff I say on Twitter. And stock starts dropping, and people getting mad. A lot of people who own Teva were getting mad. Like, why does the guy keep saying it? How come he's the only one saying it? What do you think Warren Buffett does? Warren Buffett goes and he goes and buys Teva, invests in Teva, and he has to release it on his 13F form. When all these individuals see what Warren Buffett holds and he owns Teva, everybody starts buying Teva because smart money owns it. Creates a short squeeze of Teva. Teva goes up, right? I'm looking like I can't believe Warren Buffett did that. And so Warren Buffett goes on CNBC. They ask him why he owned Teva. He couldn't clearly explain it. Why did you buy stock that revenues and EBIT and operating income is falling and they can't pay the debt back? Why would you do that? It's junk debt. They got to lay off all the employees, sell assets to help pay the debt. They don't know how bad it's going to get. He could not clearly explain why he bought it. The only reason he bought it was to create a short squeeze, which I knew, but I couldn't tell anybody because somebody looks at me like, how would Warren Buffett even know who you are? That's the only reason he did it, to create a short squeeze. Then Warren Buffett getting flustered. He said, oh, my two portfolio managers bought it. Anyway, he just did to create a short squeeze. He knew some individual who he didn't know was saying short to me, Teva as a sell. And I could defend it with actual real analysis. Nobody else could do it. I also created a short squeeze in Endo back in 2018. I knew that Endo was they were having trouble with they would stop selling opiate drugs. They were tamping down sales of those, which was a key driver of the revenue back in pre-2018. Revenue was falling, EBITDA was falling, had a lot of debt they couldn't repay. But I knew they had a drug called Zyflex that could be used to treat cellulite. So I said this drug is gonna make Endo a four-bagger. Sorry, first I wrote a couple articles that Endo is going to survive. They cut a couple of deals with Merck and a company out of Canada to provide generic drugs. So why would these big companies get partnered with Endo if it was going to go under? Because trading like it was about to go bankrupt. So I started writing that it's going to survive. Stock started getting some traction. Then I said it had this key drug that's going to make it a four-bagger. Stock started spiking. It was like 450 when I started writing about it in late May. By the time earnings came out in August, the stock was at 13.5. Then it went to over 18 after earnings. But leading up to that, everybody kept saying, why is Endo rising? Nobody could figure out why it was rising. Everybody knew why it was rising. I was writing about it. But see, I'm outside the system. I don't work for a ball bracket firm. Like Wall Street Bets, when you don't come from the click, that's a problem for them. And especially when you have analysts who didn't make this call. So, and Torian and I had talked about it briefly behind the scenes. I wouldn't have said it publicly back then. People thought I was a nut. But so this analyst. So anyway, so it goes 18. Then in November it has earnings coming out. It's also going to announce a phase 3 clinical trials for Xiaflex pursuant to cellulite. And they released the phase 3 clinical trials like a couple of days before earnings. This analyst, I can't think of which firm he worked for, one of the bulge bracket firms, started trashing the stock, started talking about how this clinical trial was not up to par. The phase 3 clinical trial was for women with severe cellulite. And he was saying that it wasn't as effective as the phase 2 clinical trials. He started questioning the effectiveness of Xiaflex. Stock started dropping before you could even react to it. Endo comes out and says, well, phase 2 was for women with moderate cellulite. So the two clinical trials weren't apples to apples, somewhat to that effect. So of course, phase 3 should not be, the drug shouldn't show a high effectiveness as phase 2 because phase 3 was for severe cellulite. They later did clinical trials to show that it was highly effective. On par with the phase 2 clinical trials. But make a long story short, he also started questioning this designation that Endo needed to be able to create separate pricing for the cellulite treatment and for Xiaflex, which treats hand deformity. He's questioning the ability to get that. He's also questioning the ability to get the FDA approval. Stock is dropping. He immediately starts talking down the stock because a lot of people are short the stock. It costs a lot of people a lot of money. They had like 40 million shares sold short. Stock starts dropping, November 2018. Then, make a long story short, Endo got this designation to have the separate pricing for cellulite and for Xiaflex. It got the FDA approval. Nothing this guy said came true. When these developments started, he started writing about the opiate crisis. Came with a totally new issue why he should sell Endo. But make a long story short, the guy starts to start talking down the stock. And a lot of people short the stock, and it helped a lot of hedge fund managers. Bloomberg starts writing articles comparing, and CNBC started talking about Endo, comparing to Insys and Mallinckrodt. Didn't have a strong balance sheet as Endo or Teva, and also Endo and Teva doesn't have the same opiate exposure. They were comparing all these companies and put them all in the same group because they were able to drive down the prices for Endo and Teva to help short sellers. In my opinion, that's the way it looked. But to make a long story short, so they do this all the time to help short sellers. And this time with Wall Street Bets, they couldn't do it. They tried it again, but it was almost too late after Melvin Capital went under. But the media comes out again, starts to help short sellers. That's the only reason you can explain it. Why would you write something not basically based on any fundamentals, comparing these guys to amateur traders, making it seem like these stocks are speculative? They're not speculative. Somebody has to buy these shares back in order to cover their short position. So it's an example, when people come from outside the system, the people in the clique don't like it. The corporate media and the Wall Street guys, with the hedge fund managers, so on and so forth, don't like it. And they band together to sort of silence people who come from outside the system, even though you're doing some, pretty good analysis and you're doing fundamental research. But it's not beyond Warren Buffett to create a short squeeze. He did it with Teva. Same thing that they're accusing these kids of Wall Street Bets doing. There was no SEC involvement. There was no Joe Biden to say, we're investigating it. There was no Elizabeth Warren to say, Teva's trading at, based on, the way Teva's trading is not based on reality. It's not based on fundamentals, like she was saying about GameStop and Nokia. She was saying GameStop was not based on fundamentals. Like, which stock is? Name one. There was no Elizabeth Warren to say anything. There was no Steve Leisman to talk about, ask the Fed, what are we going to do about Teva? Didn't say a word. So it just shows you the different stance the media takes when the wrong people are losing money. So that's sort of my take on it. But I still haven't heard clearly from these brokers, specifically Robinhood, why they had to raise capital, why they could not have gone to the Fed, why they had to stop the trade to preserve capital. I don't think anything's coming out of this these congressional hearings. I think a bunch of straw man arguments that they're going to look at all sides. Why are you looking at any side other than the fact that these people shorted these stocks and they needed capital? Why are you looking at what Wall Street's best was doing when they were trading based on public information? They are investigating. I can't think of the guy's name. One of the ringleaders. I know it sounds sort of negative. For Wall Street Bets, a guy who was doing a lot of these YouTube videos. They say he worked for Mass Mutual. And I think you're not allowed to. I don't think you're allowed to work as a registered broker or something. Not tell your registered broker about your outside information, about your outside activities or something. And he's talking about stock.
So, yeah, they may be able. The firm itself, depending on what the relationship was, and really his OBA.
Mm-hmm.
Anytime that you're a licensed financial professional, that's why most individual professionals, you rarely see advertised. You've probably never seen a commercial for an individual telling you, hey, I'm the best stock picker, or, come use my business. The reason why, because, really ever since Dodd-Frank and Department of Labor stepped in, post 2008, 2009, the compliance levels have cracked down significantly on individual activity. It's largely escaped the institutions themselves, but however, one piece of that is communication, and a big piece of that that can fall under compliance and outside business activity. So I do think that FINRA may have a case there, and that's up to them if they decide to pursue it. I think obviously with this much attention, there are so many outside forces as well beyond his control, because typically those things happen behind closed doors. Typically, that's an arbitration, a closed door hearing. FINRA, will determine, what the facts were based on what the firm is, and usually a decision is made. Even kind of a worst case scenario is usually a fine. A fine. You may or may not have to
making too much money.
Yeah, right. Outside, but the things that they were initially accusing him of, though, I don't believe stand up. Right. So, from what I've seen, he did not cross any lines. He pretty much remained anonymous. That's you can kind of argue that, but that is a completely separate argument, completely separate issue.
Right. I don't think anybody connected his YouTube videos to Mass Mutual.
No.
He wasn't using his real name. He's also, I think, on the YouTube video saying that you can't necessarily take my investment advice or whatever.
Financial advice. Giving all kind of disclosures. So I don't.
It's much ado about nothing. It's much ado about nothing, in my opinion. But I think the securities laws are written so gray that you could probably accuse anybody of anything if you really wanted to. It's probably ambiguous. But I'm just saying to say that that's probably one of the things I'm looking at. But it seems like it's much ado about nothing. A lot of like hot air and a lot of legal leads for no reason.
That's what I'm expecting out of the congressional hearings. I think we're going to see a lot of obfuscation. I think we're going to see some mild attempts at trying to simplify these concepts for the general public. But I think largely we're going to see that, and actually Elizabeth Warren hit it on the head, right? So, her public statement, or her statement, her letter, she released her letter on Twitter and other social media over to the SEC. And it read like devil's advocate. She didn't take a side. She was just like, well, the SEC is there to govern and regulate. So let's regulate, and let's make sure that this type of speculation is regulated. Just like, what? What is your position here? And I think that that's what we're going to see, is that The SEC, like in other words, existing regulations are in place. We're going to hear about the underfunding of the SEC, the underfunding of FINRA. They don't have the ability to enforce. So there's nothing wrong with the system. We just can't actually enforce the system. So we don't really need additional regulation. We just need some money to be able to do our jobs. And I think both sides of that are true, actually. That SEC has been largely gutted over the years, purposely. But also the other end of that is that they still have an obligation and a job to do.
But the reality, this is the reality that, during the financial crisis, leading to the financial crisis, these brokers, these Wall Street guys broke every securities law known to man, and nobody went to jail. There were 2 blank to jail. First of all, there was one judge named Judge Jed Rakoff, particularly wanted to see the truth emerge when it came to like these banks fobbing off their losses onto unsuspecting clients. Citigroup, JP Morgan, Goldman Sachs. It may have been more, but he wanted to make sure the truth emerged. The SEC said, you don't have the authority to do that. They told a judge, you do not have the authority to see that the truth emerges, which was his job.
Yeah.
So I think Obama wrote in his recent book, I think he did an interview where he was saying that they asked him, why didn't you go after bankers? He said that it would have been a violence of the social order, whatever that means. And he said that he real sleight of hand, said he didn't want to see the need to change the law to go after bankers, which is totally different from what Judge Rakoff was saying. Where Judge Rakoff said you didn't imply you need to change the law. You're going to use existing RICO statutes on the books to turn these lower level operatives to get to the big fish. I'll only say that to say that the SEC, all of a sudden, it's like almost like it's ad hoc. SEC picks and chooses who it goes after. Secondly, the SEC was not as well known. The SEC wants to work for a lot of these firms that they actually regulate. That's where the money is. Bernie Madoff said that. Bernie Madoff said that there were the lower level SEC people who was flagging Bernie Madoff's hedge fund as Ponzi scheme. And Bernie Madoff would call their bosses to complain. They would shut the investigation down. Bernie Madoff said, they're not going to do anything because they want to work for me. The senior guys at SEC want to work for firms like me because they can make a lot more money. Only reason Bernie Madoff's hedge fund was found out because he turned himself in.
Exactly.
He ran out of money. It was so many redemptions, he was running out of money. So along with Bernie Madoff, there was some guy named Alan Stanford out of Texas. Some junior level SEC person that was saying that Alan Stanford was running a Ponzi scheme. The senior level people at SEC in the Fort Worth, Texas office was shutting down the reports. The one lady wouldn't give it up. They transferred her to another office. She wouldn't stop. So one guy named Spencer Barash, when Bernie Madoff turned himself in, someone said, "Hey, want to go look at this hedge fund down in this bank down in Texas, out the Stanford Bank or whatever." Somebody said that was a Ponzi scheme too. Maybe we should look at that. You think? So they go look at it. They bring in Alan Stanford about to be brought up on charges. The guy, the head at the Fort Worth, Texas office leaves the SEC. He leaves. There's Bishop Barash leaves the SEC. And I wrote about it in my book. He leaves the SEC to go represent Alan Stanford in court because he can make more money as a lawyer for Alan Stanford than he could at the SEC. And even before he left the SEC, he was warning Alan Stanford what the junior level people were saying. So you and Mr. Davis, I'm the senior level guy at the SEC in Texas, Fort Worth, Texas office. I'm telling Alan Stanford what you and Mr. Davis are saying about him so he can protect himself. Then he went into the courtroom with Alan Stanford. The judge said, "You can't do that." The conflict of interest to represent Alan Stanford when you used to work for the SEC. So the SEC is it protects these hedge fund managers because those are the companies they want to work for. So protecting the individuals and protecting their capital. So it's I just want to make a segue to get back to the economy and a lot of the social unrest that's going on that all these big institutions that control our lives in different aspects, whether, propping up the housing market so young people can't afford a house. It's got to be frustrating. Just about everywhere you turn, there's some institution, there's government or corporation that'll block your path. And, we talk about a lot in terms of, if you're especially if you're African American from the conscious community, you get thwarted a lot by people in the corporate media. I've written articles for Seeking Alpha, and I've seen people in corporate media go on TV and repeat exactly what I said verbatim and not cite the source. So it's got to be frustrating. So we can pinpoint it when it comes to the amount of capital that's been given to these big institutions that uses capital to weaponize themselves against African Americans and poor people. We can point to a lot of people in the public. They know something's going on. They don't know quite what it is in terms of these people rioting in the street, Capitol building riots, and it's going to continue. So I think this is part and parcel of it. So I just want to sort of wrap up in terms of when it gets back to the economy and big picture level and social unrest. I think this is part and parcel of that, where you have the wrong people losing money, and here comes the SEC wants to do something. Steve Leisman wants to ask the Fed what are you going to do about it? And I actually suggested that they take CNBC off TV years ago because it's just nothing but doing PR for Wall Street. And you have Joe Biden getting involved because individuals are making too much money. So I was just curious what you guys think about how this plays into the economy and overall social unrest. Sort of our last parting shot.
I'll let you take the floor, Mr. Davis.
Mr. Davis, you can take your last parting shot.
Well, we got to remember the question in the 60s. How come? Hello?
Yeah, man.
We can hear you. You're good.
Okay. We got to remember. Oh, you can hear me. Great. Okay. We got to remember that in the 60s, they asked the question, why was the rioting in the 60s? What was the social unrest? Well, we hear again, people are not dumb. They might not be educated on a lot of subjects, but they know what they feel. If they don't feel something ain't right, if things ain't coming the way they think, if I can't get a house, I can't get certain things, I'm unhappy. And I don't care how you play it out. I don't care whose fault it is. I want what I want. And you promise me that's what you're going to give me, and I want it. And you can cheat, you can lie to me, but I still feel what I feel. And when these people are rioting, and that's the case of it, they might not know what it is, but they know that they're not getting what they want. And they don't care why they're not getting it. They want what they want. And that's going to be the bottom line for it. You're going to have to, the politicians, the media, they can all try to play a card that they don't know why these people are unhappy. They'll tell them. They'll find out. They better find the answer out quick. Because I heard one of the media say that they think we're headed to a civil war. You think? Oh, maybe not. You can hit it all. You think? People are unhappy. And you're making people choose sides. And that's the danger. You're Republican, you're Democrat, you're making them choose sides. You're not letting them be Americans. It's dangerous. All right.
Okay, Torian.
All right. Yeah, I'm actually going to piggyback off Mr. Davis's both of his points that he even made earlier, because it is a culmination, and that's really as he was speaking, it reminded me of Kwame Ture's one of his speeches where he stated that rioting is the language of the powerless, and I think that continues to remain true as long as we have an underclass of people. What makes, I think, America unique and Black people unique is that consistently, because of a racialized system, we remain as the underclass, largely with the exceptions. Oprah can't cut a check out of racism. She already got booted. I believe it was Harrods over at either Switzerland or England. I think it was Switzerland. They already booted her out. Told her she couldn't buy a $35,000 purse. Meanwhile, she was already worth $6 billion. So you can't cut a check out of racism. And for us to pretend that it's solely about class or solely about race will always turn a blind eye. In other words, you will never see the full picture. Both require an analysis. Walter Rodney wrote about it and how Europe underdeveloped Africa back in '62. Which really led to his ousting out of Jamaica. And the reason I bring that up now is because the lessons, and really what Mr. Davis has been saying, we're repeating that same cycle. And I agree that even economically, we have this bubbling, in other words. We can use the most ebullient terms to describe it. We can use all of the industry lingo. At the end of the day, what are the material conditions? Can I pay my rent? Can I send my children to school? Can I afford to get to work? Can I have a consistent paycheck? And whether it's black or white, because I'm black, I have another hurdle. That's where the race analysis comes in. If I'm white, I only have class analysis that I have to deal with. So if I'm not happy being in my socioeconomic class, it's a problem. If I'm black, I'm already not happy because I have race to deal with. And now you throw the class on top of it, I got twice the problem. So now what we are seeing is that this manipulation within markets that, if we want to really pin it all the way back to Nixon, where we've seen the most dramatic decline since coming off of the gold standard. I'm not jumping on the bandwagon to say the gold standard by staying on it was going to be the fix versus getting off of it. However, when we look at that decision and what the consequence of that decision, that's the material condition that we have to deal with today. And that has led to the Reaganomics decline, where we saw the deregulation. We saw some implementation of trying to re-regulate during the Clinton years, but those were the years that they decided, hey, Negroes, we already didn't like you, so we're going to stick you behind bars even more. And we're going to privatize prisons, and we're going to incentivize those prisons to put your asses right in jail even more than what we were already penalizing you for. So in other words, we fast forward through all of that. And, just since the 80s, we've already had 4 recessions. We've already had, in my opinion, two depressions. This current time has surpassed the Great Depression of the 30s within 4 months that it took 5 years to get to during the Great Depression's time, where we had peak unemployment. Unemployment peaked. It took 5 years during the Great Depression, for example. We had peak unemployment in 4 months. So when we talk about the economy and when we talk about what is the effects of the economy, that even during a crisis and where the earth is tired of it. The earth is tired of us and has sought a correction. Listen, the earth has decided it is going to purge one way or the other. And even in spite of that, where you would think that should there be a kumbaya moment in life, that COVID would be that kumbaya moment simply for the sake of humanity. And yet cops still had the time to kill a black man, not even by a bullet, You literally tortured a man for 8 minutes. You still had enough time to let Black people know that your value will never be as valuable as long as you remain the underclass and the powerless. So, in other words, we see all of that has led to social unrest. I'm not even sure where the not just the conscious community, but just those that are aware. I mean, you even have BLM, where they've raised during a pandemic. BLM has raised over $10 billion. $10 billion. Meanwhile, the actual on the ground organizers who are doing the organizing and raising the awareness, they're the reason that over 50 million people have participated in marches and demonstrations for social justice, for defunding police, and essentially bettering our communities. Meanwhile, they can't even get the funding that BLM's national chapter has raised. So, in other words, it seems as if no matter
It
where,
doesn't trickle down. It doesn't trickle down. That what you said.
exactly, it has not trickled down at all. And it's like, so no matter where you stand on the political sphere, whether you consider yourself a radical, whether you consider yourself a leftist, whether you consider yourself a liberal, whether you consider yourself a conservative, a centrist, it seems like no matter where you stand in your politics that affects your day-to-day material living, that there's social unrest, there's fraud happening, there's a collective angst there, and we're seeing that economically. We're seeing that in the lack of jobs, in the lack of quality of jobs. The largest industry that gained employment over this past 2 years was an industry that actively lobbies to break a federal minimum wage, which is the NRA, and not the gun. It is the National Restaurant Association. They are actually twice the size of the NRA. It's like, how did federal minimum wage was $7.25? How do you get away with paying somebody $2.25 an hour because they're supposed to make up in tips? Like, this is what and when we look at the greatest job market that has seen a boom, this is the industry that has. So when we talk about quality of life, when we talk about social unrest, no matter where your politics are, no matter whether you get this conversation or understand it or not, at the end of the day, you know that you have no roof over your head. The roof that you have over your head is shaky, is crumbling. The foundation is deeply cracking. All sides surround you are closing in. And the last bastion, which is really where this GameStop came in, is that the government couldn't even, they paid out $600 in the course of a year. $600. You pay more in that, even if you are sitting at the federal poverty line, you literally pay more in taxes than $600 a year. And the government is only giving you a $600 a year check. And for those that have taken that stimulus money, decided to put it into a GameStop, now you've literally stopped the game. So they can't even make the money that they're supposed to be getting on a monthly basis from the government simply to keep their heads above water. It's like, it's a mess. It's a hot mess. And I'm not sure that we, I think as a country, and not even just as a country, as a globe, because America is, in my opinion, is not a country any longer. It's a corporation. It is one of the most intertwined corporation, global. It is a global conglomerate. So whatever happens to America happens to the globe. So in other words, we're beyond teetering, in other words. And I don't think that we're done seeing the us versus them. I think that the economy is actually one of the least of our issues. Because the economy is simply our way of recording the numbers of what's happening. At the end of the day, it's people. The economy is people. And if we can't take care of people, and if we can't allow people to at least take care of themselves, and we're stopping folks from taking care of themselves, well, that is the language of revolution at that point. And, you know, as much people want to talk about revolution and liberation, at the end of the day, those two words mean the exact same thing. And those two words mean war. That's it. And not an ideological war, not a economic war. We are talking about a physical war, armed revolution. That's what that means. So will it happen? Will we get to that point? You know, I don't know. But I'll just say I'm ready. I don't know who else is, but all I can say is get ready, just in case, you know, prepare for the worst and hope for the best at the end of the day. But that's my take on the economy.
Okay. 20,000 foot level. I think most of the people who were part of Wall Street Bets or Reddit brigade were actually Caucasian. I think these people now understand what it's like to be black.
Yeah. Yeah.
They understand what it's like to be African American. They're probably in a like a state of shock right now, and African black people look around like, well, who didn't see that coming?
You're right.
Like, we look around like that's one more thing we dealt with last week. And so I think a lot of white Americans are looking around like, what in the world? They did what? They rigged it against us? They just stopped trading. So anybody saw the the movie Trading Places, and the Ralph and Mortimer said, turn those machines back on.
Yeah.
In this case, they actually turned the machines back on. So, we're gonna fix it for you. I think a lot of this, we've been talking about this for years, that a lot of this, that spike asset prices in the middle of recession is pure economic folly. And it's, so you see very small segments of society being successful at the stake of a million suffer. I think you see it's basically breaking down to three different groups: those who donated to Obama's campaign, somebody Obama wanted to work for, and he left office, or somebody he wanted to sleep with. And that's basically it. And the rest of society, you're printing money to help a very small segment of society is not going to work. So we talked about this for a while. And lastly, we all love our country, but I mean, what is it going to take for these politicians and the powers that be to actually see that what they're doing is not working? So that basically wraps it up for tonight. This has been a very good discussion. I'd like to thank Mr. Davis and Mr. Mitchell for making me look bad. I didn't send you the contracts. I'm supposed to have you guys sign a contract and not make me look bad. But thank you so much. So in 2 weeks, we'll talk about the Capitol riots in DC, and get you guys take on that. I'm sure you probably have a lot to say. Again, so thanks a lot. This has been a very lively discussion. So that's Trump and the GE versus GameStop. Thank you.
All right. Take care.
All right. Okay.